Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, my mic is all ski-wampus and stuff. Hey, we have the jobless claims here in like 4 minutes. So this is going to be hyper fast, okay? S&P 500, we moved up yesterday. Treasuries, we moved down a little bit, but are now recovering from that. Federal Reserve didn't say anything interesting, in my opinion. Their OPEC is meeting today. There is some volatility in oil, and natural gas is still kind of on the up move. Gold and silver got hit yesterday, but they are recovering. Kappa still in the range. The dollar index got hit pretty hard, also off of the news, but recovered and is now back above 94. Bitcoin and Ethereum moving around off of the FOMC, but ultimately lower here this morning. Jobless claims, they are expected to be, well, let me pull up a little better source over here. Initial jobless claims. Not continued initial jobless claims. Where is it? It's like 270, right? Where is it? There we go. U.S. initial jobless claims, 275,000. So that will be down from 281,000 the month before. That's the estimate. And I don't see any reason why it will be significantly higher or lower, but it probably will be a little bit lower than that. I rate the probability is that this will be a beat. They'll be lower than anticipated. That's good. Okay. So that's where we're at. How we doing this morning? We got everything going here. I think we're good. Pull up, make sure financial juice is turned on here. 275. Traders push out the first 15 basis point Bank of England hike to February and see 1% in September. Okay. Is there some sort of a press conference today?
We're seeing from costs here, it's saying that the ECB decision
or
allows
is it the Bank of England?
Financing conditions across the recovery.
How are you guys doing this morning? You're there, right? There we go. We're good. I think we're good. There we go. I wasn't sure. I was like, I couldn't see my own message, but it was because I need to go to live chat, not top chat. Why would you move the mouse pad? My kids used my computer last night and they moved everything. Like, why you gotta move everything? We need to be careful today. U.S. Treasuries are moving way much more than normal. Well, we got the Bank of England was just happening, so I think that's why they're moving just now. We're going to get the jobless claims and see if that roils the markets or not. In the micros, there's like zero liquidity, so I'm probably not going to be doing anything at the moment.
269k, 269k. That is lower than the
forecast. Okay, so as predicted, it is slightly lower at 269,000.
International trade minus 80.9 billion, minus 80.9 billion, lower than the forecast of minus 80.2 billion. We have the US productivity prelim at minus 5.0%.
Something happened to my NQ dom over
5.0%,
here and
lower than the
changed
forecast of
the
minus 3.1%.
font.
Canadian trade balance in now 1.86 billion, 1.86 billion. That is higher than the forecast of 1.6 billion. US labor costs prelim 8.3%, 8.3% higher than the forecast of 7%. US continued jobless claims in at 2.105 million, 2.105 million, lower than the forecast of 2.15 million. The USDA, US net wheat export sales at 400.1K, 400.1K. US
So
net
you come in
soybean
here,
export sales at 1,863.9K.
non-farm productivity negative 5% versus negative
1,863.9K, and the US net
3.2.
corn export sales
That's a big miss.
1,223.8K.
Unit labor costs 8.3 versus 7.1.
Seeing comments from Bank of England's Governor Bailey says the UK and global economy continue to face challenges as we recover from the pandemic.
Some of these numbers are not paid attention to very much, but like limit unit labor costs, non-farm productivity, these are all
Bank of England's Governor Bailey here is
hawkish
commenting
numbers.
during a
These
media
are all, oh, we're getting inflation, right? Unemployment claims, that's it's not like crazy, but that's good, right? I did see that the liquidity in the micros came back pretty quickly. The liquidity in the 10-year is still light, but they are moving. We are forming a little bit of a bearish trend. And once again,
Bank of England's
it
Governor
seems
Bailey says
that the bearishness
growth in consumer
is
spending.
concentrated very heavily in the 5-year. $25.5 was a yearly low at one point. Okay.
Bank of England's Bailey says there are
Well,
a few
it's
signs
now
of
much lower
increasing
than that, but
redundancies.
that's where it was before all the crazy.
Bank of England's
Morning,
Bailey
Gus.
adds that the rise in unemployment after furlough is only expected to be small. So that's Bank of England's Bailey saying that there is a small rise in unemployment seen in the fourth quarter.
This is the first time I can recall where the Bank of England was speaking and the liquidity was skittish about it. It's usually like a non-event.
Bank of England's Bailey says that most furloughed employees are likely to return to work.
Well, they've gone back and forth across 29 half a few
Bank of
times.
England's Bailey says that sterling oil prices
On a
are up
relative
80%
basis,
this
the
year.
amount of liquidity that is stacking and pulling on the tick is okay. So I don't necessarily see stress in the order book
Bank of England's
from
Bailey
that
says monetary
perspective,
policy
other
can
than
do
that
little to affect
there's just
inflation
not a
in
lot
the
of
near term.
liquidity on the board in general right now.
Bank of England's Bailey adds that the inflation peak is materially higher than the August estimate. Bank of England's Bailey says inflation expectations for the 2 to 3 years out have risen less than the short-term measures. Bank of England's Bailey says
Okay.
that household inflation
new
expectations are
lows.
stable.
Should pull up my Twitter here. Forex Live says Bank of England fails to walk the
Bank
talk.
of England's Bailey says that medium-term inflation expectations are anchored.
YouTube Finance says he's drinking some really low quality coffee right now. You guys. See, I don't really see a liquidity hole so much as just light liquidity
Bank of England's
overall.
Bailey
So
says the
like
spare
we
capacity is
could
seen
slip
opening up
around
later in
here.
the forecast. Bank of England's Bailey says what happens to energy prices is clearly very uncertain and material risks around this assumption. Bank of England's Bailey says inflation hits targets 3 calendar quarters earlier under alternative energy price scenarios. Bailey adds that inflation target remains the aim of policy. Bank of England's Bailey says inflation framework recognises there will be occasions when inflation will depart from target due to shocks.
And they're kind of throwing it out there, but not anybody really.
Bank of England's Bailey says given the lag change
rushing
in monetary
to
policy
take it
and the
at the
impact
moment
on
at
inflation,
28.
the Bank of England will always focus on the medium term.
Let's sit there.
Bailey says that recent data reinforces the view that rates need to rise. Bank of England's Bailey says the uncertainty remains on the labour market.
The Bill and Melinda Gates
Bank of England's
Foundation is
Bailey
stepping
says
up
the
efforts to
near-term
address
uncertainties remain,
a looming
especially on the
deficit
labour
of
market
syringes
and
for
persistence
COVID
of
shots. Oh
domestic
my.
costs and price pressures. As we're seeing from US Senator Manchin saying, I don't think that paid leave belongs in the spending plan. Back to Bank of England's Governor Bailey, who says that the unemployment is not expected to rise materially in the near term, but high degree.
Yeah, it seems to me like coffee is an acquired taste that you have to pick up in your early 20s, and that if you don't, you realize that it's disgusting when you eventually try it. I know, I have never tried coffee, but the smell is so disgusting to me. I do not like the smell. Okay, they tried to clear 28, but they did not hit into 27.5. Like 294 traded there, and then nobody stacked and it reloaded at 28.
The labour market frictions are set to decline.
But the 30-year is now starting to lead the charge. Now that's interesting. So is the 30 and the 5 going to fight over it? You've been drinking it since you were 12? Wow. Really? It's not good for kids, is it, right? Coffee tastes like an old woman, but burnt sticks in her mouth and then spit in your mouth? What? You going short?
Bank of England's Bailey says that MPC notes that the CPI will be below the 2% target at the end of the forecast period and will probably fall a little further beyond that point. Bank of England's Bailey says there are two-sided risks around the forecast. Bank of England's Bailey adds that this period of higher inflation is likely to be temporary.
Seeing a little bit of convexity
Bank of
here.
England's Bailey says that inflation surge is likely to be temporary. Just to repeat there.
Okay, I am going to jump out for a bit. Well, I was short
Bank of
because the
England's Bailey
numbers
says, I would caution
were.
against
Oh,
the view on the
so it's funny
scales
that
of the
you
increase
I got
in the
out
bank
just as
rate
you said that.
would be likely to push inflation
I
below
was
target.
short because the numbers that we got were suggesting inflation, and I felt that the move up that we had wasn't really based on informational flow.
China's President Xi may agree on the easing of visa restrictions.
You can kind of see how I didn't like how things turned out there at 28, right?
Bank of England's Bailey cautions on the
It's
scale
like saying
of
you
rate
like oats
bets
as long
seen
as
in
you
the
put enough
markets.
sugar, honey brown
Bank of
sugar,
England's
molasses,
Bailey
and
cautioning
on and
on the
on.
scale of rate bets seen in the market.
But I don't know. I prefer the whole grain cereal to the oatmeal to the standard. It's not even really the standard, but like the instant
Just
oatmeal.
after that comment from Bailey there, we are seeing some weakness in sterling now.
Like that it's excellent as no. Okay. I'm telling you, it tastes bad. Coffee is the perfect example of how all taste is acquired, right? Because naturally to you, it tastes bad. And people only like it because they acquire the taste. And why do you acquire the taste? Because your body likes the caffeine.
Bank of England's Bailey says, I cannot give a fixed time span for transitory inflation. Seeing from House Democrat Jayapal now, says that the House will pass.
You're a part of a
Biden
big
bills.
coffee conspiracy. All taste is acquired.
The longer the period of above inflation target, the greater the chance it translates into expectations.
Okay, so they coming back up to the open. I'm seeing a little bit of fight in it, but I do think that they're probably going
to go up and then down again, not
balance out
high.
somewhere over here. 2 points, let's drop. I'm not. I think in this situation, I'm not so enthusiastic about a trade in the E-mini at the moment. I kind of see things are moving around a lot because of the Bank of England, and I'm kind of seeing things like die down. No. I was long rates was what I was talking about there. So guys is showing me a picture and he says, what do you think of this? The idea is trying to understand the price move causality over time from the DOM and the tape. Well, so the difficulty with what you're talking about, Gus, is that there's really 6 forces, right? There's buy market orders, sell market orders. There's buy limit orders, there's sell limit orders, and there's buy limit orders canceling and sell limit orders canceling, right? And to really sort out why price is moving, you kind of have to look at all 6 of those, and that's what actually determines price. So that's why I think it's better to look at the individual orders on the DOM and see how it's moving around, rather than having like 6 different data series on a chart, right? I mean, if you're doing like algorithmic trading, then that's kind of the path that I would take. But if you're doing it discretionarily, like we are, you're probably better just watching the DOM. Does he need to get filled? I don't know. I sure read that turn there down at the bottom correctly, though, didn't I?
See good reason that inflation will be temporary from Bank of England's Broadbent.
I mean, the excursion against me wouldn't be too bad yet, but I just don't like the smell.
Keep in mind that Bank of England's Deputy Governor Broadbent is now commenting at a press conference.
It smells like my grandma and grandpa's house in the morning. I hate it. When I was at university and you'd do the early morning classes, and there'd always be that basic white girl that have like a double mocha whatever from Starbucks.
By global shocks.
Kill me. I hated it. Let me tell you something, guys. Just become a morning person. You can do it. They say that some people are like naturally inclined to be one way and are naturally inclined to be another way. I have a theory that you can be naturally inclined to be one way, that you can choose which way you want to be. That your body will go into a mode and then you'll start to naturally want to go to bed late or go to bed early. Except for ADHD people who, for some reason, their melatonin production is always delayed. That's my kind of girl. Don't remind me of undergrad. Espresso or nothing. No. Just become an early morning person. Go to bed early. Wake up early. Who am I to talk? I have Adderall to keep me awake in the morning, so... Look at that. 31.5, huh?
Bank of England, when asked on the timing of the Bank of England rate rises versus the Fed.
That's just lucky, I guess.
The UK is a much more open economy. So to repeat there, Bank of England's Bailey, when asked on the timing of a Bank of England rate rise versus the Fed's, says that the UK is a much more open economy.
The way that moved, though, kind of makes me not want to touch it now. So maybe we'll just relax here until we have the timing is right for something in the E-mini. Yay! Businesses will have until January 4th to comply with President Biden's vaccine mandate, giving them a reprieve over the holiday season. You know what? The mandate is turning out to be really dumb. Like, it really is turning out to be really dumb. Like, you are harming businesses. You are harming people that don't want to do it, and that's their choice, but they don't want to do it. Coercing them by taking their job away ain't going to get them to do it. And it's just going to piss them off. And meanwhile, you're like doing material harm to the economy. And for what? Like, it's just, I do not see any evidence that vaccination rates have a significant impact on, like, Delta waves, for instance, right? It's just not worth it. It's just not worth it. And it's crazy to me that the Biden administration is choosing that to be like their battle. But what you gonna expect? The Biden administration has just bungled things at every step. He's teeing up the ball for Trump. Well, I'm still not convinced that Trump is going to run again.
Global story.
I think it's marketing. I think it's hype. I think that he's starting a media company, and I don't know how things go with the SPAC at this point, but you know, it kind of depends on how involved he gets with that company, right? And if he gets really involved with that company, he's not going to run for president.
Inflation is in line with the historic average, and the overshoot is in goods prices.
But he's teeing up the ball for somebody. Like, you see this stuff from the elections yesterday. Like, okay, we were predicting. I guess I didn't actively predict it, but it was kind of a foregone conclusion in my mind that McClough, or whatever his name is, was going to lose in Virginia. Apparently, the polling still suggested that he was going to win, but you could see that when we were talking about it earlier in the week, right? You could see that the writing was on the wall. The New Jersey governor being so close when that guy like literally spent no money, that's really shocking. Although it probably the New Jersey guy wins. Sorry, the Democrat wins over there. Apparently, even in New York, Republicans made some headway. So, like, if that's what's happening to them in just kind of an off-year local elections, midterms,
Bank of England
next presidential election,
we have not had any official labour market data that post-dates the end.
How do you turn that around? And I keep seeing things that kind of make me mad, like that just seem like they're going to make everybody mad. They don't necessarily make me mad. One of the ones I find really funny is their whole stimulus package, whatever that they're doing right now.
Bank of England's says
that they added a tax cut for the rich in it, all out of nowhere. So that one's kind of weird. But then there's this argument over paid family leave, which apparently Manchin is not opposed to doing paid family leave. He just doesn't want it to be in that bill because he doesn't think that they're doing it the right way. Which, okay. Fair enough. Why is he short? Because the bars for the last 20 minutes have been down bars. Yeah, I at this moment, I don't see a reason to be involved. We could if we're really anxious to be long interest rates, we might have just missed our best chance because they were almost all the way down at 1.605 there for a moment, right? But when I kind of look at the range that they're developing and the situation that we're in, I don't necessarily see like a huge liquidity hole. Like, they didn't really trade that much off of this news, but the liquidity was light. And so it looks to me like we're just kind of sliding across the range at the moment. So that's
quite hard.
Not necessarily the best setup unless we have a really, really strong reason to believe that rates should be increasing, which
Bank of England's Bailey.
I'm not so sure, to be honest, at the moment. Like, I kind of feel like that.
Also seeing that traders trim the
we're fairly.
Let's see the Bank of England
priced.
rate at 1% in November 2022.
Must be really dehydrated this morning.
Bank of England's Deputy Governor Ramsden on the wires.
Here's
now.
the NEOS
We never
traders
attempt to
trading NEOS.
validate or otherwise the market rate curve.
I suppose one thing that I could say is that because of the taper, we should expect rates to rise generally. Generally speaking, we should expect rates to rise because those orders are going to come in. But it's not going to be like an all-at-once thing or anything like that. So it's kind of like, at this exact moment for us, that's not really a reason to trade.
The rate curve has risen further recently. Would pull inflation further below the target at the end of the
It does kind of give me a long rates bias, though. And for the risk, 61, it's not bad, right? Okay, so U.S. regulators finalize rules requiring Americans who work at big companies to get vaccinated by January 4th or test weekly. So that is happening. So is that... let's see if I can get more information on the specifics of that. Because there was some question about, like, if you worked at home and all of those sorts of things. Occupational Safety and Health Administration. The fact that you have to move it till after the holidays, it should be really alarming to people, right? Why do you have to move it? Because obviously it's a bad thing for the economy. And they don't want it to hit during the holidays, right? It's a little
from ECB's President Lagarde at the
it's a little scary that they know that and they're still willing to go forward with it.
At the ECB CEPR Women in the Economics Conference. No indication of a text or Q&A expected here. Bank of England's Bailey says, I don't feel a need to vote with a majority of MPC.
Yeah. Bum, 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 ba-dum, ba-dum, bum. Now they're talking about legal challenges. But it seems to me like it doesn't matter if I'm working from home, it doesn't matter. I'm going to have to be vaccinated, right? Or test daily. Which, what qualifies as testing daily?
0.08% November 3rd versus 0.08% November 2nd.
And I'm honestly a little concerned about... It's my blood pressure. My resting blood pressure is a little high because of the medication I'm on. I wonder if that matters. I'm seeing around the web about this. They're pushing back up again. These 9 Republican senators failed to sign on for a formal challenge to Biden's OSHA vaccine mandate.
A blockchain.com launches crypto trading in state of Georgia.
Okay. So there actually are a couple of reasonable people on this list, and it's not that they oppose it, it's that they want to see the rule come out first, which is now this morning, so they should all come on board and say, yeah, we're going to fight against it.
Bank of England's Deputy Governor Broadbent says the outlook for energy prices is key to the rate decision and makes the decision hard.
You don't know your blood pressure, though? Yeah, but I mean, I don't know how it works. Like, is the blood pressure a factor? Maybe it's not. Maybe it just has to do with how healthy your heart is. But, like, there's been healthy people that have had heart problems, right? The other one was that they're insisting on vaccinating kids, which I think is insane, to be honest with you. Like, kids aren't dying from COVID.
Bank of England's Broadbent said the UK saw inflation hit 5% after the
there has been
2009 financial crisis.
Concerns
transitory then, and I expect
over heart problems, particularly in young men. And in so much so that some countries have halted it. And then they just push ahead anyways. Everybody's got to get it. I think it's crazy. Why? Why are you so anxious? Force everybody to get it. And I don't think, I'm honestly starting to think that it is not about, oh, we want to get everybody vaccinated or that it's going to have public health. I really think that it's more about punishing people that are likely to not support him, right? Like, if you work for a police department or you're in the government or whatever and you're a Republican and you're against the mandate, then you're going to get fired and lose your job. And then they can consolidate their control over those agencies. That's what I think is going on here. Because I can't think of any other logical benefit of pursuing the actions that he is. Maybe they're just control freaks. Yeah, I don't know. It's gonna upset people, right? Like, people were kind of, another thing is that because it was like drip drip, like if he had just come out, okay, here's the rule, boom, back when they announced it, then it probably wouldn't have been as bad. But now what's happened is everybody has kind of had like 3 months to be like, oh, is it going to happen? I hope he doesn't do this. Oh, he is going to do this. Now they're going to be even more mad because they've had 2 months to work up being mad when he does it in their minds. You know what I mean? That makes sense. Well, they seem fine there at 31.5. They're just kind of leaning on 131. Mm-hmm. No, I'm not seeing it yet. I think that the political bloggers have not woken up yet. So they're not covering it. Yeah, I guess maybe this news is a little bit more breaking than I realized. Okay. It will matter. I don't know how much. But it's certainly not going to make your supply constraints better, right? CBOE. We are excited to introduce CBOE Fixed Income, a new dealer-to-dealer electronic trading platform designed to better enable dealers in U.S. Treasuries to efficiently source liquidity and trade in size while reducing market impact. To be released first quarter 2022. Hey. You want to try long now? I did think it's a better time. I'm not so sure about the price. Yeah, I probably will sit on the sidelines.
And the US weekly jobless claims report is available on the feed for those who are interested.
Got a little rug burn on my elbow, and should have been more aware of it because it looks like the scab kind of got damaged a bit in the shower. Well, I'm also kind of wondering, I suspect the non-farms tomorrow is going to be pretty good, just based off of the news that we've had so far. Usually today there's more detailed analysis of it, and that's usually where I get a really good idea about if it's going to be beat or not.
2021 is also available on the feed for those who are interested.
I'm kind of, so it was something we should look at. There's not really any other news today, right? Natural gas storage, no. There is OPEC meeting today. I don't know what the time frames on all of that is. Oil is on the up move. Gold is on the up move. Dollar kind of coming back towards 94. Now Ohio's trying to do the same sort of a bill as Texas did about abortion.
China Energy's coal output hits record highs in October. As I said to repeat there, NDRC
this whole allowing civil action against an individual who performs an abortion or knowingly engages in conduct that aids or abets the performance or inducement of an abortion. I'm not so sure that that kind of a law is constitutional. It seems to me like Republicans are shooting themselves in the foot with putting that provision in. I don't understand why they want to do it that way. That wasn't too bad. The treasuries are like right up there on their highs again, but it's not. It certainly seems like that the buyers are stronger. I mean, like the move when we were having the move down, the way that the bears attacked the lows was pretty pathetic. Although when we have drops, it often is that way, right? But here on the upside, they look like it's decently strong. They're not like super hype about it or anything, but
So hearing from sources that the OPEC JMMC has started now.
wait, what? CME Group signs a 10-year partnership with Google Cloud to transform global derivative markets through cloud adoption. Google also made $1 billion equity investment in CME Group. Really? The CME gonna move to the cloud? That's okay. I don't know about that one. I suppose that Google would have a Chicago data center, right?
Bank of England's Bailey says we look at a wide range of inflation expectations.
There's got to be an engineer somewhere that's mad right now. there's a network engineer that's really mad right now. They're gonna say, "No, the Google doesn't know what it takes to run a data center with our kind of needs." You're supposed to share. I mean, was that much? I guess it was 2 points, huh? Hip hooray. I'm still looking at it like, man, it's just noise. They kind of current bar is short. Like if it wasn't 713, then this is a spot that I could actually consider shorting. So I'm more, I don't know. I want to be happy for you, Ace, but I'm more concerned about myself at the moment. That's what it is. You can make money, you can make excuses. No. Do not fall for that one, okay? Just because you make money on a trade doesn't mean that it was the right trade. Just because you lost money on a trade doesn't mean that it was the wrong trade. And taking that attitude and, always convincing yourself that you missed out when it moved a certain direction is going to damage you in the long run, right?
7 million tons on November 3rd.
There's not a super strong reason to be taking trades at the moment. You went long in the open and got stopped out at 2 p.m.? Oh, wait, really? So... But that means that you still got a really good profit from it, right? I got a pretty good winner off of that yesterday. I should have just held it, but I was going for certain targets. You lost money on it? Going long? In the ES? How did you lose money going long on ES yesterday? No. Maybe you mean you went long on the Treasury? I don't know. Oh, okay. You went long on the Treasury. Okay. Well, I was like, man, if you went long on the E-mini. Cat Turd says, get ready for a Biden Great Depression. Nah, it's not going to be a Great Depression, but it's certainly going to be problematic. It's certainly going to be problematic, I think. Like, what do you think people are going to do when you come in on January and they're expecting a jobless claims number of like 260 jobs lost and it comes out being 320, right? Like, the markets aren't going to react well to that, and it won't be like a depression, but there's going to be a period there where all of those job numbers are going to look bad and the Biden administration is going to look bad. And then at that point, you have to start looking for like the knockoff effects, right? Does it end up creating supply constraints that harm other companies, and you can just get this spiral, right? That wouldn't necessarily happen, but it's a risk. But my point on this is simply that it will harm employment, and the Biden administration knows it, and that's why they're delaying it until after Christmas, which is just like 5-point stop. Well, I don't know. I mean, it really just depends on how long you want to be in the market, right, Ace? If you're more interested in being in the market for like an hour, 2 hours, that doesn't seem like a bad spot. If I lost 250, is it? Well, but that's not 250 on micros, is it? No. A point is $10, right? It's like $50. Or sorry, a point is $5. So it's not, if you're doing it on micros, it's not a ton of money. Yeah, it's $25. Yeah, well, of course he says 250. Ace calculated it correctly. He knows. Okay, so the Treasury had a little bit steeper of an excursion there. We're back to our 61.5 though. Oh, I don't like that. Like I would like, if I'm gonna go and turn going long on the Treasuries, that it would be at 61. Well, okay, whatever. What you're saying doesn't make any sense at all, Ace. Why should it matter that they're looking for 2 points or 5 points? And you have a 2-point stop or a 5-point stop. Right? The how far it has to move is not necessarily relevant. Okay. Okay, the OPEC plus JMMC panel meeting has begun, says sources. Just take a picture of me on the opposite side of every trade. That doesn't make any sense at all. Why? Because he has a larger stop. Like what? What? Yeah, I think you're making him mad. Maybe he's trying to swing trade, dude. Like, why would it matter? Why do you think that matters? Why are you saying it like that? That's really bizarre to me. That's really bizarre to me, man. Like the size of your stop isn't relevant. What's relevant is if the size of your stop is appropriate for the edge that you're trading. You know, like there's going to be a certain number of trades that he's going to win on that you're going to get stopped out on. It's really what it comes down to. I picture Ace on the opposite side of my morning trade. Thanks for the cash. Did you take a trade in ZB, Uzi? I assume probably not, huh? By the way, I didn't see you yesterday, or did we see him the day before that? Anyways, we missed you. Oh, that's interesting. When you look at ZB, today's point of control is yesterday's value area low.
Bank of England's Bailey says that activity in the housing market is still very strong.
Thanks. Good job.
Bank of England's Bailey says my warnings on rates have been very clear.
A 5-point stop means he has a 10-point target. That's not true. How often does the market give 10 points? Every day, actually. Actually, based on some data that I've been looking at, you probably have a pretty good chance to go for 16.
Bank of England's Bailey said that none of us ever said that rates would go up in November.
You woke up late, but you still made money. Hey, there you go, Uzi. You need to paint a room. How are you going to use a spray painter? You're going to do the rollers? I've seen some amazing videos on TikTok of people painting. The R&R needs to be over 1? Not necessarily. Right. We have that in the model. Remember we had that little spreadsheet? Do you want me to show you the math? Would you like to see the algebra about it? Not at all. I'll draw I have a video here on this channel about expectancy where I cover the algebra for it and I graph it out for you. And there is a way, given any risk reward, to be profitable. You just have to have a win rate high enough given that risk reward. If you have a risk reward less than 1, you're going to have a really high win rate. Now, the good news is that having a risk reward less than 1 lends itself towards you having a high win rate. But, you know, generally speaking, what's going to happen is you're going to win like 60% of the time, but you're still going to break even. And that's going to be the case regardless of what range you put it at, right? In a Gaussian market, in a random walk, your risk reward isn't going to be what makes you money, right? So frankly, if it's a random walk, then if you get made money, you're just lucky, right? There's nothing about that in the break-even law. Listen, if you can break even, that's good. That's better than 70% of people.
Bank of England's Ramsden says supply at the end of the forecast horizon is about 2% lower and reflects demographics, COVID scarring, and changed labour force participation. Bank of England's Ramsden adds, I don't think our estimate of 1% COVID-related scarring has changed that much.
See, maybe we could get 61 now. Remember I was saying, well, if I want to go long, I'd rather have 61. So maybe I could get 61. But the issue still remains that I don't really have information that suggests to me that I want to look for rising rates. In fact, if we look at the trend over the morning, it's been higher. So higher prices, lower rates. So probably we should just sit on the sidelines. But I'm trying to show the young buck how a 5-point stop might not be how so. All you're saying is that if you are an unprofitable trader, you're going to lose the money faster. That's all it means. But where your stop and your target is, that doesn't make the strategy profitable or unprofitable. If you're trading noise, then it doesn't. In the long run, it's going to come out even. Like I can go and how do I know this? Because I'll go in and I'll set up a trade. Okay. And I'll say, here, let's do it. Let's do it. We can do it. We can do it. Strategy analyzer. We'll use ace 1. Okay. So we can use any reward factor we want, and we can use any stop that we want. That's in ticks, right? So we're going to do an optimization here. Okay. And let's just only do this year. Let's only do this year. Okay. So for a reward factor, I'm going to be really generous and I'm going to give it a 0.25 reward factor. And the max I'm going to let it go to is 10 and increment it by 0.25. So you'll really get like every little step of reward factor that you get in there, right? And then for the stop, we're going to say a minimum stop of 4 and a maximum stop of 64. And we're going to do that by force. Okay? And then we're going to do it on the ES. And we're going to do it on 1 minute bars. Include commissions. Okay? Or we could concentrate. I'm still not interested in trading it, although we do need to watch what it does here in 10 seconds. 640 iterations. Let's see how quickly it does that. Should be relatively fast. Yeah, okay, so the initial volume was selling. That's interesting, but it's pretty mild, even by, the standards that we've had for the past few weeks. It's pretty mild open imbalance. Poor Rocos. Oh boy. There's a lot of stocks that have been getting just really beaten up. Ones that were popular, like, Zillow being the best example, right? Am I seeing that right, or is it just because the backtester is running? Because that is really slow opening volume. That can't be right. Am I running out of memory now? Let's see. I may have run out of memory. May have been too big of a backtest. I think we're okay, actually.
Bank of England's Bailey says that stagflation isn't a very useful word.
It is going up, though. I think I've run into the memory leak. Sucks. Yep, now it's at 12 megs. I'm using 12 gigs of memory. But here's the thing. Whether or not your stop is large or not large is not going to increase or decrease the chances of it being a profitable system. All you're saying is if you're going to lose, might as well lose small, right? I don't know. Oh, okay, here we go. Actually make money on the long trades with these ones. Okay, so we did 640 iterations. There were a couple of strategies that kind of almost broke even with that strategy, which was trading across a moving average. Okay. Now over here, we have this lovely little thing called an optimization graph. Okay. So what we can do is we can graph not net profit based on our stop and reward factor. Okay. And watch what do we get. Ooh, look at that. Can you see that? Okay. Hold on a second. There we go. So you see that, Ace? So what does this tell us? Actually, what does this tell us? Okay. Let me turn it that way. So here's your reward factor right there. And there's your stop right there on this side, right? The axis on the right side here is the stop, and the axis on the left side here is the reward factor. What do you find? The smaller your stop is, the less profitable you are. So the reason I'm giving you a hard time, Ace, is because if you have a long stop, you have time in your favor, right? So even though if you're really losing, you could lose it fast, the expectancy tends to be better the larger your stop is. Understand? That's just the randomness. Now, having the large stop doesn't get you above break even. But it does work better than the super small stop. It's like an iceberg turned upside down. Right. Now, interestingly enough, having a high reward factor also helps you. But on both of these, there's kind of a point at where it kind of stops mattering. Right. He's trading. Okay. Did you get 2 points? Because I'm looking at this. The open has been 5 minutes and they've traded 4-point range. That's not a market I want to get involved in. So yes, I think we're learning more from this. Apparently, some of you guys haven't seen this before, so I'm glad that it's useful to you, right? You can come in and you can create this lovely 3D graph, and you can see it right there, right? Wider your stop is, better. Higher your reward factor, better. Now, why is that? Now, this is just cross of a moving average strategy, right? Why is that? Why do you think that is? Do you think anybody, class, what do you think could be a reason why having a larger stop tends to result in a better expectancy? Anyone? I'm like the guy in freaking Ferris Bueller. So what happens if you have a losing strategy in a large? Well, but these are all losing strategies, right? Let me reiterate here, because I know that you can't. It's really hard to read the letters here, right? Oh man, let me just make it like full screen, okay? I make this full screen, and I'll make these bits up here like as small as possible, so that you can really try and see it as well as you can, okay? The up and down axis is net profit.
Seeing that the Democrats' right to U.S. Treasury.
The axis on the right here is the stop, and the axis on the left here is the reward factor. Note that all of these strategies, and we tested 640 of them. Oh, get my picture out of the way, huh? Yeah. Oh, oops, not that way. We need basic. There we go. Okay. Net profit. One on the right, stop. One on the left, reward factor. Okay. Now you can't really read it, but if you see here on the net profit, you'll see that every strategy we tested was unprofitable. Right? Every strategy that we tested was unprofitable. But what happened? The ones with the smaller stops, and in fact, it was actually a stop. Like, where does it start to even out? It says stop around 24. About 24 is where it kind of starts to even out. And when you get to a stop of only 4, it's like absolutely terrible, right? Stop of 4 is absolutely terrible. Now, part of it is because you take more trades. Right? The less, because the algorithm doesn't, it gets in a trade and then it waits until it gets a stop and its target, and then it will do it again. And if you have a smaller target and smaller stop and target, it's going to get out, and so it's going to take more trades and it's going to lose more. That's part of it, right? But the other part of it is that the larger your stop is, the more risk you are taking on. And how does noise trading work? You're being rewarded for taking on risk, right? So larger stop, higher probability of success. Doesn't mean that you will be successful, but it does improve your probability of success. So for him to be trading 5 points, we should be impressed with that. We should be, okay, you're going for a bigger move. But the question is always going to be, what kind of win rate are you getting? Because when you combine the stop and the target and the win rate, it's almost always going to even back out to being roughly break even. But again, every strategy that we tested, it was unprofitable. Block buy, huh? So it's going to be like that again today, huh? Should have gone short rates. It's okay. These ones are so bad that the best one actually has a negative Sharpe ratio, which means that you're actually making negative money for the amount of risks that you're putting on, in addition to losing money. You can actually have a profitable strategy with the negative Sharpe ratio, but it's really hard to make happen. Right.
The correction. SEC's Pierce saying that Gensler likes to
Anyways,
see asset trade.
so I wouldn't knock on somebody for having a large
SEC's
stop.
Pierce comments during a major news
Because again, I
Innovation
need
Summit.
to turn that off. You shouldn't be able to hear that. Yeah, I wouldn't knock on somebody for having a large stop. It's just, how are they trading? How are they actually doing with that large stop? Right? Most people, they're still not going to make money. And that's why I'm always kind of my next kind of question is like, how are you deriving the trade? What kind of a trade are you doing? So I was looking at somebody's results the other day, and oh man, they had some drawdowns. Like they would go up and they would make like $20,000, and then they have a drawdown of $20,000. But then they'd go up and they make $40,000, and they have another drawdown of $20. And you know, it was like, oh, like up, lose it all. Up twice that, lose it all. Up twice that. I was like, okay, but that's maybe the way that you should do. But it's very risky because that kind of a drawdown suggests that like you could really screw it up and blow the account, right? Yeah, everybody that traded that strategy that I showed you lost money. But the people that had a larger stop lost less money than the people that had a small stop. But this guy, he actually had edge. Like you could actually look in it, and he was like equal risk reward, and he was winning like 60% of the time. Like there was actually edge to it. That's what matters, my friends. Is there actually edge to it? Because we want to think that our stop and target, that there's the magic in the stop and target, and that's what's going to give us edge. No, doesn't work that way. It's about when their account hits 0. Well, like I said, the large stop lost less money than the person that had the small stop, right? So all I'm saying is you're claiming that having a large stop hurts you. The data does not support that. So here again, Exhibit A, Ace thinks that he is all about science-based approach to beliefs and against wrong beliefs. But here you have a belief that was not based on data. When I show you the data, you're trying to come up with all of these sorts of reasons to be like, why, you're trying to, you're in the 5 stages of grief. You're still in the denial stage, maybe bargaining. Maybe if it's a profitable strategy, it would be different. But it's the same thing when the profitable strategy. The larger your stop and the higher your risk reward, the more money you can make. And that's just the way that the statistics work off of randomness. I'm still talking about you, YouTube finance, for sure. I am a little bit jealous that you can take a 5-point stop. So I don't think that I would be able to. I would be too squeamish, man. It'd be too squeamish, man. Like to me, I get in and it's like 4 points. Well, I guess 5 isn't huge, but to me, 2 points is randomness, right? You lose money slower. Yeah, but what you're saying, whether you make money or lose money has absolutely no relation to how large your stop is. Having a larger stop helps. Having a larger stop helps, but it's not the determining factor. The determining factor is, do you have edge? I know that wasn't directed at me, but I'm still kind of, I don't know. 5 isn't too much, but I kind of feel like, more than 12, 16 ticks, and it's like, it goes that far against you, you did something wrong. is how I look at it because of the range of like 10-20 minute period. But the reality is it just, like, it really doesn't matter. It just matters like what is your edge and how much of a stop do you need in order to capitalize on that edge. My thesis is I have edge if I only take long trades and I use informed trading to pick the right days to go long. Well, that's probably not a bad way of approaching it, YouTube Finance. And if you really try and hold it for the whole session, the only issue is you might have to be more than 5. You might have to have even more than 5, right? Like you might have to have 10, 16 to hold to handle if your entry is like completely random and you really want to get them all. You might make more with a 10 or a 16 tick stop, right? But you've got the right approach. You're trying to be informed and you're making the decision based off of information. But the real question is, because the other thing is he didn't tell us what his target is. But the real question, the determining factor, like the thing is when I put it into that framework, right? Now you can focus on one metric. What's your win rate, right? And you can judge your success based on what the win rate that you get is. I got schlonged yesterday because my stop was too small. Yeah. I understand. SEC's Pierce comments why the SEC has improved a Bitcoin ETF. The SEC's Gendler prefers to see assets traded on regulated markets. It's only been a week. Okay. Okay. I never agreed with you on anything, Ace. You ragged on him for having a large stop, and I'm telling you that's not a bad thing. At 250 a pop, you'll know some enough. Well, I mean, if he has a large enough account. But I'm guessing that you're doing it with micros, right? I used to do it with SPY. Yeah, I bet you probably would on SPY options. Yeah, he's doing it with micros. Yeah, so. I like to say, take your average loser. Could you lose 50 times in a row and still keep the account? Then you're probably fine. I didn't say that it would wipe out his account. What the size of his stop is irrelevant as to whether or not he wipes out his account. And the strategy, his strategy is one that can work. In fact, I think that his approach is a really good one. It's not too different from my approach. I try to only go long, and I pick which days I go long based on informed trading when I have something that gives me an edge that suggests that it's going to move up. Not really getting that today. I mean, the jobless claims were good, but hey, like say tomorrow comes in and the non-farms payroll is good, then I'm going to come in and I'm going to try and go long and hold it as long as I can, right? The max I can lose is 25 days in a row. Okay. Well, this is not optimal, but if that's what you have, then you'll be okay. It's a light day today, isn't it? Is it because we've been arguing? I don't know. All right. Yeah, I see what you mean. Because you only give yourself one trade a day. Sure. For sure, where I've gone wrong in the past is I'll have a loser and I'll just trade. And all of a sudden I'm down $500 and it's like, how did that happen? Oh, I took 20 trades? Oops. Now I take 1 or 2 a day. Period. And if it's not really going, if it doesn't really trend the way that I'm going, I just give up. I go, okay, well, it's not that day that I thought it was. The year 1.6. I mean, I could have gone short the rates. That would have been a good trade, but I'm not quite sure I understand why they're rising here. So, what you gonna do? And I had my thesis. I went in. I took it short. The thing that was great about today, and the thing that I've really struggled with in the past, was I got it. It went my way a little bit, and normally I would hold it, but I didn't. That time I said it's not doing what it's supposed to, so I'm just going to take a small profit. I'm just going to pay for some commissions. Worked well, though. In the end, it was the right choice. We could certainly be long, though. I mean, they are trending okay. It struggled. It was slow on the open. But since that time, it's been pretty consistently up. That's practically what people pay for lunch here, right? You know what is so? Here's something that's interesting to me, or I'm gaming out in my head, because micro treasuries really changed the game. They really changed the game for futures, and futures are more and more becoming an option for people that really don't have a lot of capital to risk. I'm having a lot of fun here, just risking $10 a day, right? But the thing that's going to hold you back is that one is the data fees. They've got to do something about the data fees, because it's just getting ridiculous right now, right? When we started, it was like, what, $10? Anyways, they're just having a problem scaling it, I guess. And then the other problem is that you got to pay a lot for the platforms. But I kind of have some hope that cheaper platforms will come about. Like, somebody was telling me about an open source platform that was out there. So I'm hoping that some cheaper options will come about. But once you get past the initial investment, yeah, you're really not risking very much at all. Especially in micro treasury futures. Lucas says taking a short break. So I'm kind of wondering, like, I was kind of thinking that Thursday would be a more active day, but I was clearly, that was the wrong take, because the markets haven't moved that much. The 10 points up here in the ES. It's not bad. I mean, it's not like dismal or anything. You could have made money on the long side, but how do you call a rally in both bonds and stocks? I know, right? And I'm not quite sure I understand why the bonds are rallying the way that they are either. I mean, they've been doing it all week, but I don't understand why they're doing it. You call this a not active day? Yeah, it's not a net. But the thing that is really making me say that it's a not active day is that we do not have very many viewers on the stream today. We have an unusually low number of viewers today for some reason. And that very often coincides with times when people just aren't watching the market for whatever reason. So, but it is, I guess we have been spoiled by volatility, but the volatility is decreasing a lot, isn't it? The VIX got destroyed this week. Well, I mean, I'm kind of talking about all of them. Like, I was thinking about taking a trade on the open. I didn't like the way that it opened. I got into discussing something else that I think is more important. I should have my camera up, probably. But, you know, even though it moved up 10 points, I really feel like no desire to like take a sim trade on the ES, right? Hey, by the way, good morning, live action. Yeah, the move up in the bonds is a pretty decent move. You're right. I'm definitely more interested in trading the bonds right now than I am trading the E-mini. But I don't understand the move in the bonds, so that's why I'm not touching it. I'm not touching it because I don't understand. I don't understand it. They seem to think that their pricing expectations about when the next rate is too high or something. I don't know. I don't get it. I don't see where the buying is coming from. So if I don't know where it's coming from, then that makes it really difficult for me to know when it's going to stop, right? Sounds like OPEC is going to come in as expected with 400 barrels per day. 400 million barrels per day or whatever. So, Now, there is a big iceberg there at O2.5, so that might be a sign that this is going to be take a break here. You know what? Another thing, Lucas, is when you look at the cumulative delta today, I don't actually see the activity. Like the range is high, but I think that that's because the market makers are just jumping out of the way. Right? Like it's 10,000, maybe 10,000 contracts long in the end. It's not that much, right? That they're trading a 10,000 iceberg here at O2.5 is, you know, ends up being as significant as the whole cumulative delta for the day. That's kind of weird, right? So is CL going to move up off of this news, or is it already priced in? I'm not seeing it move off of it. Might be worth a long there. Let's say 82.75. Wow. Yeah, so one thing that we should keep in mind here in the Treasury is that we're towards the top of the range for the last 2 or 3 weeks. So the 10-year beyond 05 half starts to be like, what's going on? 5-year is already there. But it could be rising because of the spreads, and it does look like here on this most recent rise up that the whole flattening trade is kind of trying to come back again after it steepened so much yesterday. I don't look at cumulative delta, but it seems like arbitrage. Yeah. Well, it could be. Yeah, this rise up does seem to match up with the Japanese yen pretty well. So you might be right. It's not like there's like serious money coming into the treasury market moving it, but that they're moving off of correlations and so forth. I would agree with that. Correlations and on top of that, the market makers just aren't trying to fight it, right? So the E-mini finally made a little bit of a pivot there. At least on a 1-minute chart it did. I have no clue who you're talking about. Or are you talking about the Axia guy? 1,000 contracts on the 5-year? Sure. They got some funding over there. Yeah. Like, this is another one that I again, like, everybody seems to fight me on it, but I'm telling you guys, Axia has enough money that they have a noticeable impact on the market. And I have seen some situations where the market did something that didn't seem to make much sense to me, and the Axia guys had some sort of a thesis behind it that was kind of a little bizarre, but it went their way during that short term, but then, it would later flip on them. And I suspect that what you were really seeing in that situation was the effect of their impact. They're still eyeing higher, it seems. I would be really there's no way I'm going to try and go long here. I'm not necessarily seeing the situation that I would need to really go short either, but they're not backing off. Live Action says waiting for the pullback too, probably next Wednesday or next week. Oh yeah, we do have daylight savings time soon, don't we? I forgot about that. I'm not a fan of daylight savings time. I am not a fan. Oh man, with the kid, it's gonna be so rough with the kid. Oh, it's okay. We will get it. we will survive. Okay. See, like they're going up there and they're like eyeing it, but it's not happening. But the thing is I haven't. Well, I don't know. I'm not seeing the square root impact, the order book being damaged, sort of a thing that I would expect to start seeing at some point here, right? I never really saw any like real excitement or people getting stopped out or anything in the treasury either. Just a little bit of a bizarre move. It's a little different than it's been. Seems like there's something going on under the surface here, but that it is like it's not over here. It's happening somewhere else. Oil coming back down here, huh? Well, I guess they haven't actually had the meeting, but it sounds like the insiders are saying that they're going to do 400 billion barrels per day. Let's see what happens. Maybe that means there's still some risk that they come out and they decide to raise it, because a lot of governments are like just begging them to raise it right now. The OPEC schedules press conference, which signals a short meeting. Okay. Did we ever find how to access the bond cash market? Well, remember we had looked into a bunch of different, like there are retail brokers where you can go and you can look at bonds, but I never found one where you could really see the flows over there. I'm not so convinced that you'd get that huge of an edge from it. Like I do, there is a lot of order flow that we're not seeing, but the moves tend to originate in the futures. So yeah, like I haven't seen a platform where it's like you see every order that's coming through, right? And that's what I'd be interested in. But I would assume that the markets are pretty well correlated in that respect. If you saw some big orders come through in the cash market, you probably would see the response in the futures immediately. Okay, they're eyeing that high of the day again, that 30. I'm not sure. Usually I will hear somebody mention the UK, and well, usually it's John that will warn us, but I haven't seen anybody say anything lately. Nor have I really noticed a difference. So, well, a few orders went into 3.5, but should we reset it right there? There we go. It's not playing out like a level break quite yet. The Igor Dancherico, the main researcher of the Steele dossier, was arrested by federal authorities as part of an inquiry led by John Durham. Well, that's interesting. There's some new highs in the E-mini. I'm feeling a little sleepy now. We still got an hour. Well, not an hour. 45 minutes left in the stream. And it's been I mean, there's some good action going on here in the Treasury, but for me, because I haven't been involved in it, it's just kind of been a slow day, huh? How much could we have gotten if we $20? That wouldn't have been too bad. No, $30. $30. If we had decided to go long, short rates. There's 04. The 5-year slipped through pretty good. Missed this break, yeah. I mean, we had plenty of time to get in. I was just kind of sitting there this whole time just because I wanted the short. So I'm like, well, I'm not going to touch it. But it still makes you wonder what's driving it. I mean, we were talking about the Japanese yen and everything. But on this most recent action, the Japanese yen hasn't really been moving. It's been the volume in the Treasuries pushing it to a new high. You're not paying attention. Bank of England said it expects to raise rates in the coming months, putting it ahead of the Fed and ECB. Still awaiting OPEC stuff. Is the VIX up right now? Check that. It really has been like all the things, huh? It kind of sets up a really puzzling situation for the non-farms tomorrow, doesn't it? What do you think will happen with the non-farms at that point? Unless they think non-farms is going to be mildly bad or something. That's some good movement after the level break, huh? So let's kind of see, like we're kind of getting some more stop run type action. A miss would be wild. Yeah, it really would. If we had a miss, like, was it last month or the month before that? Okay, there it is. Nassim Nicholas Taleb, if you have any reason to buy an option, don't buy it. For speculation only, buy options when you have no reason to buy them. Okay, so you can definitely see it happening there at 06, right? That doesn't mean that they're not going to push up again, but that's going to become a level that could become problematic. Ooh, and strong tick down at 05.5, huh? Now, so we get in the pullback. Note the 5-year leading that pullback quite heavily. So I'm wondering if the change between the rates and the prices was driven by the yield curve and the difference between the 10-year really being more like a 7-year and this being a 10-year. But, the 5-year really moved and the 10-year yields really haven't yet. Mm-hmm. You can see it like when orders come through in the 5-year, and then these ones go, okay, yeah, maybe we'll tick down too. Okay. I'm going to let them off the hook and just take 4. I know that's super small, but they need more than that if they're going to really like reverse. And I shouldn't be looking for a reversal, right? Yeah, there you go. For half, not what we want. Ooh, 5. So it was at 06 that we had the problem area, right? So let's watch here. Do you see the 30-year not backed off very much? And again, flattening coming in on the curve. Traders anticipate a 10 basis increase from the ECB in 2023 versus December 2022. I'm feeling sleepy again. What's with me this week? Are you guys still awake? You know what? The two trades that I had today, I called pretty good though, right? Like, never really had adverse excursion against them. Timing was all correct on both sides. Still hearing stuff about OPEC, and it still sounds like 400,000. Did I say million earlier? Yeah, 400,000 barrels per day. Now, yeah, I'm wondering why that's turning into a sell in CL. Because isn't that just like in line with expectations? That would be like, cool, we're gonna get 90 in oil, right? That's what that says to me. But they're selling it at the moment, so that's why I'm not an oil trader. My leg's getting all bouncy now. Let's see here. Mohammed El Ryan. Yet more evidence of the robust demand for labor in the U.S. Labor unit costs jumped 8.3% in the third quarter compared to the consensus expectation of 7%. The prior quarter's number was 1.1%. And weekly jobless claims again declined to 269,000, which was better than the median forecast. And they did magnet right back to those 6, right? So like my thinking on that last trade was, okay, I see the hole at 06, and I can see that some people are taking profits, and it's gonna shove us back down. Now if we get that and we come back down to like 05, 04 half, do I start seeing more aggressive selling to suggest like a meta order going the other way? And we didn't. It was just kind of a little lackadaisical, and so that says to me that everything that I made there was just because of the liquidity hole at 06. Ergo, we are likely to get drawn back into 06, and that is exactly what happened. Dwayne Johnson vows to never allow real guns on set again. Oh dear. Maybe just like follow the safety regulations. Yeah, you can definitely see it going on in the 5-year there at 052. They're still tilted a little bullish, though. They could try for another high. Like, they could try for another high and then get sucked back. Then they might have to wait a little while to recover. Oh, by the way, I said 05 half in the 10-year, didn't I? Yeah. So now you can see. Oh, no, it was 07. I was wrong. 05 was the previous one, and then 07 was the one before that. So ever since this crazy over the weekend drop that we had on October 15th, we're now retracing that. Now, if we started, well, yeah, even all up into the 131.5 area, I think that we would be okay. Like I'm thinking that anywhere from here to here going forward is fair based on current expectations. We start getting outside of those ranges, then I'm going to have to say, did something change? And if something didn't change, then that's an opportunity to fade it. But you made a 4K day? No, you did not. You're going to have to start showing me these. You're going to have to start giving me screenshots, Lewis, because you're coming in every day and saying this now. S3 Partners retweets Ihar Duanaski, who I think is their quant. I don't know. Anyways, the Tesla short interest is $35 billion. 29 million shares shorted. That is 3.65% short interest of the float. And including today's move, those shorts have lost $1 billion. They've lost $1 billion. You know, so you were talking to Gus. I was just thinking, well, when you said that, it just reminded me. You know what? I bet you the reason why the VIX is moving up is because of the non-farms tomorrow. Just happy to report. Well, it's not that people don't make profitable trade. See, well, I don't think that actually helps, Lewis. It really doesn't, because the problem is like you make money on one trade. It doesn't mean that you always do, right? Okay, so now that was a real stop run right there in the Treasury. 0.7 Look at that. And they're trading into it and he's reloading it. Really? Non-farms is the biggest mover. Oh, really? I didn't realize that you were that new, YouTube Finance. Yeah. Non-farms is the second largest significant economic event that happens in markets next to the Federal Reserve interest rate decision. So you can get really monster moves off of it. You're staying profitable, so I'm just following orders. But you know, what would be more useful, Lewis, though, would be if you could show people, like, you know, as many as far back of a history as you're comfortable showing of history, and then we could go back and we could look at the stats and we could be like, okay, this is how much he tends to lose when he loses, and how much he tends to make when he wins, and this is the win rate that he's hitting, and this is how he says that he's doing it, and we can kind of sort some things out from there, right? The non-farms payroll happens the first Friday of every month, unless it's like a really special situation, like there's a holiday or something. Wow. So this is, yeah. So every once in a while you get the Fed meeting and the non-farms in the same week, and it ends up being a big week. That might be part of why. Well, so this is why, like, this is turning into a big move in the Treasury. Like, do you remember when we were here earlier and Lucas was saying this is pretty good, and we were like almost 25 basis points higher when he said that? Like, this turned into a monster short covering rally of some sort. So it's really quite weird, right? You got to wonder what's behind that. We need to figure out what's behind that. Schumer says they're committed to trying to pass the Build Back Better spending plan before Thanksgiving. And Newsquack asks, of which year? Could this be because of what's going on in Congress? That might be one theory. I mean, I didn't see any like specific news on it, but it was kind of like they were saying that this week was make or break, and it kind of sounds like it's breaking, like that it's not happening. And if it's not happening, then they're not going to take on as much debt. That means there's not going to be as much issuance, and hence the treasuries move up. Could be. That's one theory. Another theory is just short covering. If it's just short covering, then we just ignore it, right? Well, with the way that this is playing out, I think that there's a pretty good probability that we're going to have a significant pushback on it at some point. Like, I don't know what the driver behind this meta order is, but it's definitely to the point where we have to call it a meta order. They did end up trading 50,000 contracts. Net cumulative delta up. Man, like when this all started, it was just kind of like, this was kind of slow. It really turned into one, didn't it? Right? But that's the thing, is you can't necessarily, is there even a way to find out if it's short covering? I don't know. Well, so I think that one thing that will help is that we can look at the what do we call these? We can look at the open interest reports that are released on Friday, and we won't know until next week. And of course, by next week, the markets will kind of have moved around and we'll have a better idea. You know, a lot of it is just you kind of have to read the news and talk to people, and sometimes you're able to figure it out before it happens, and sometimes you're not. It takes quite a bit of investigation. We've been getting this rise all week on. I haven't been able to figure out what the driver is, but they did 50,000 contracts on Tuesday. They're doing 50,000 contracts today. So somebody really big is buying in here, and we're not quite sure why. It could just be a sovereign wealth fund just buying it up, you know. But because of what they've done to the liquidity and the number of contracts that it's gone, what you're going to see is, one, I think there's a pretty good chance that we're getting close to the end of the meta order, although I could be wrong. It could be a trend day, but we're probably getting close to the end of the meta order. And because of the damage that they've done, well, you know what? I'm saying this like way too late. Because of the damage that they're done, they're still likely to get sucked back to 06. So you got a pretty good pullback, right? Yeah, when you're saying buying, you're referring to the Treasury, yeah. I'm talking about why is the Treasury seeing the huge move up that it is. Right? Because that's a pretty big move. That's a pretty strong trend. You don't get trends like that every day. Well, now somebody's throwing some liquidity up at 08.5. That's interesting. It's okay. I pulled $4 out of it before it went and then got out. What was it at? 5.9. I could have reversed and made a good trade. That's just so nuts. See, the thing is that this spot around about, let's say here, I don't think that you really had anything that could really tell you that there'd be more to this order. Once we got up in here, it was kind of fast. Then you're already kind of a little bit too late, right? But we could have come in and said, nah, there's going to be more because that's not enough volume. Could have. I certainly knew that it was enough of a risk that when I saw it not continuing down, I got out, right? Would much have rather have tried to make my $4 off of this pullback. Next OPEC Plus meeting will be held on December 2nd. Mark your calendars. The Democrats are really catching on to this. Republicans are the party of parents, not Democrats. Well, it's not true. Parents are more likely to be Republicans. Oh, Democrats are the ones looking to pass universal child care and universal pre-K. Yeah, but they don't care about that. They care about being able to have a say over what their kids are taught in school. What a tone-deaf idiot. Who is this? Oh, yes, this is Jay Appel. Okay, well, there you have it. There you have it. Well, they're handling 09 pretty okay now. They are stepping up a little bit there at that spot, so I'm not even sure that we should be looking for reversal now. And since we did get the pullback to 06, we got the pullback to 06 and it shot back up. They may just balance up here at 09. Double distribution, well, not even double distribution. Maybe you could call it double distribution from 31.5 up to 08.5, but either way, large meta order buy, pushing us up. Surely there was some short covering in there, but I don't know if that was the primary driver behind it, right? My chest really itches for some reason. Something better not bit me there. So we're going to put into today's title, Monster Rally in Treasuries. I want to say something about how it kind of started slow. How do I say that? From slow start. There we go. Well, we got about 10 minutes. Can't complain too much. I made $5, but wish I was in on whatever it is these guys know, right? I need to make a video specifically about bonds. Dum-ba-dum. E-mini really slowing down there, huh? Seems like they've found their spot. Well, there's certainly not reason to be trying to make big moves now in this location. We could wait 45 minutes. There could be more to some of these moves, but I really can't make a call on that because here again, I'm not necessarily seeing a fundamental catalyst driving this. I should come in here and just check zero hedge and see if we see anything. Golds and stocks store as bonds and dollar reversed post taper move. Wedbush sets AMC price target to $7.50, saying the apes will eventually cash out. Oh boy. Well, let's read the zero hedge story. U.S. equity markets began today as they finished yesterday with a panic bid at the cash open, extending gains post taper. Yeah, I don't know. Because I was running the thing. Maybe the order flow was slower than what I saw was slower than what it actually was, because it kind of seemed like it was a little slow for the first 5 minutes, but then once they got going, didn't they? However, bonds, gold, and the dollar are all reversing the initial post-taper moves. The dollar has entirely erased the losses post-taper, thanks in large part to a drop in cable due to the Bank of England surprise. Oh, okay. So that might be a good... Okay. So could it be that... Yes. Could we be getting some foreign currency flows? So we should look at the 6B. Hold on here. Global no time scroll. It could be. It could be there. It could be coming from cable. That's interesting. The euro just getting crushed there, huh? Okay, so maybe this is actually a really good theory. This is a flow that can end up being significant for a long time. If the Bank of England is going to raise rates faster than the US and the ECB, then that can cause some demand from them, right? In essence, well, I don't know. That doesn't quite sort out. The way that this has happened in the past has been confusing to me. I'm not sure if that completely makes sense to be the reason for the move. But it does seem to be the most significant thing that's happened this morning, right? Gold is the most impressive, not just reversing the knee-jerk drop, but soaring back up to $1,800. Yes, that is correct. Spot the odd one out. I can't tell based on their colors. This color, and this color look the same to me. Help me out here. Which one is the one that's going down? Is it the generic first ES future, or is it gold? Oops, that's not what I wanted. Notably, Powell appears to have threaded the needle and managed to jawbone down rate hike expectations. Will all of that change on a quote-unquote big number tomorrow? That kind of suggests that Zero Hedge already thinks that it's going to be better than expected, huh? Well, so going back to yesterday's Federal Reserve meeting, because we should note that you get kind of these knee-jerk reactions during the meeting, and then in the coming days they actually price it correctly. That happens a lot, and I feel still that what we saw from Powell yesterday was overall dovish. So seeing a rise in Treasury prices, I think that makes sense. I think if the Bank of England is getting a better yield, I think that when that happens, what happens is their yield goes. Well, I think that everybody's yields go down from that sort of a thing, but doesn't quite make sense to me, right? Because it's like that should be less buyers in Treasuries compared to the bonds or whatever. But since I don't have a way to really graph that, because I don't get European market data, we'll have to go and look. But if we go and we look at the spread between the British bonds, or whatever they're called. See, I don't know much about the British interest rate markets. Man, I need to do some research, guys. But we could go and look at that correlation and see if like where it started and where it was strongest and so forth, and see if that was a driver for the move. Some are staying away from the central banks by buying Bitcoin and precious metals. Well, so again, the problem with those kinds of investments is that they are based entirely on the flow, right? What is the driver for people to come in and buy Bitcoin or to buy gold? Because they think that it's going to go up and that other people are going to buy it in the future. So, but not because of, some fundamental flaw. It's basically not as reliable of a trade. And I'm really concerned about the Bitcoin market in December. Okay, so starting from about November 20th to December, and probably going all the way through to next May, I think that the Bitcoin market could have some issues. There's probably going to be some selling from Mt. Gox. If that happens and that breaks them, you could see a deleveraging, and that's going to pop a lot of bubbles in terms of like things that people believe about Bitcoin that aren't true, right? So, what about Ethereum? Well, it's a good question actually, because in a situation like that, what I would be really concerned about is DeFi deleveraging in particular, and that's really going to hammer Ethereum. But Ethereum is also experiencing a supply crunch, where more supply is being taken out of the market than is being added to the market, because basically people using the coin and burning coins by using it is now exceeding how much is being mined. So that's deflationary and tends to move Ethereum up. So in a deleveraging, understand, they're all going to get slaughtered. Totally, they're all going to get slaughtered. But after that, assuming that that after all of that you still want to get into Bitcoins, yeah, probably Ethereum's a better bet. But there's all sorts of problems there, right? Like I think that the longer term problem in Bitcoin is competition from a central bank digital currency, right? So I don't know how you sort out what the central bank digital currency does to hurt the demand versus what the burning more coins does to the supply, and how you sort that all out. But in the short term, if this trade, let's call it a trade. I'm not putting money on it, but let's call it a trade. In November 20th, over Mt. Gox having to sell some of its Bitcoin, if that really does turn out and turns into a sell, they're all going to get harmed. You don't want to be in it, right? Now, precious metals. Let's talk gold. Well, gold is looking better, but so where's the camera? The camera's right here. Gold has been looking better, but it's been tough, right? Just like we're still just treading water in gold. So I don't know. If Bitcoin got crushed, and I think that gold would probably benefit from that a lot. I think silver could benefit from that a lot. But it's still tough, because what happens is rates increase and then the gold just gets crushed. Now, if the market embarks on we're really buying this up, because I mean this is getting a little nuts in the Treasury, right? This is getting a little nuts, and if this doesn't get unwound tomorrow, then we really have to start wondering, right? And in that kind of a situation, gold could do well, yeah. But we still need a little bit. But when we come back in on Monday, by the end of Monday, I think we should have a really clear idea of what we want, where we really want to go medium term in the macro. Like I think I'd have enough information to try and start making my bets on the next move in macros. But for now, I'm just a little flat-footed and behind the curve, and that's okay, because you're not always going to be at the front. All right. But I do think that the Bank of England may be a critical component behind what's going on right now. Okay. I got to go. I'll see you guys tomorrow. Thank you guys for it. It was a little bit lighter of a stream today, but hey, the guys are still here. The guys that are always here. So I appreciate it. I'll see you tomorrow. Stay profitable, friends.